Welcome to the Trading Lounge, and here we're looking at the S&P 500 on a 2-hour chart, and our count so far is that wave 3 is in place now, and wave 4 is moving back into subgroup 2, which is 65, 72 and the 80. Look, pretty much wave 4s can get a bit complicated, especially when there's been a strong wave 3 here, which it's reasonably strong, and so we should expect at least a sort of a 3-wave swing here, such as an A and a B and a C, but wave 4s produce sideways and complicated correction, so we may even get some sort of triangle and so forth here. So let's just allow it to mature and for the week to unfold. Right, so we should be looking at, once this has its little correction here, we should see another wave up through here. Of course, reaching 1600 here, it's a big fat round number, and you know, it's gonna be a bit of a brick wall there as well. So we should see a larger corrective pattern across here. In the short term here, we really want the wave 4 here to stay above the 1572 there. If the 1572 becomes the resistance, then we've obviously got a larger correction occurring, and that count would be, in this case here, would be the 1 and the 2 to here. This third wave would be just this little top here, and the fourth wave with into this one here, and the fifth wave already in play there. That's what would happen if the price dropped out of group 2 here, the 65, 72 and the 80. Just got to be mindful of this, because the futures and the cash can have slightly different wave counts on them. But yeah, look, as we see it, we've got one more up through here. Yeah, so we'll see how we go with that. Same with the Dow Jones as well. This is still the S&P 500. Sorry about that. The Dow Jones, the 14,800. As mentioned when we first arrived here, we'll be seeing larger swings across here, and I still think this is the case as well. The wave 4 normally breaks the trend line channel that's unfolding, so we can expect that. So yeah, a little bit more there. Same here. Same with the European markets as well. The third wave up through here for the FTSE at 64. It's what we mentioned when we got up here. Just expect a larger correction across here within group 2 as group 2 here as support, and group 1 here as the supply, the resistance. If, of course, if we were wrong in the count on the upside, if the 30, the 64.30 became the retested support, then would be trading long from that point to the higher side there. So that's something to just to bear in mind, because, as I mentioned, the wave 4s can get a bit complicated. In a bit of a nutshell, they can be 3 swings like most corrections, or because they're wave 4s, they can actually have 5 swings, double zigzags and triangles, or triangles have got 5 swings in them. So, but also, as you know, and using the levels and using price as a point to work from, is that you want to see a matured correction here. You want to see a couple of, good swings across here, and then a retested support on the 6400. You need to have support to go long on. You don't want to go long under the closest largest number. I know that I ramble on about that a lot, but you need to be on top. It needs to be tested, and then you scale in from that point. The Australian market is slightly different. I feel that in the bigger picture here, I'll just go over this briefly here. You know the story, we've got this 5-wave structure to the downside, so we're looking for basically an A and a B and a C to the upside here, and then another 5 to the downside. This first leg up through here has got its little 5 waves up there, if I can just find that there. Oh, look, here's the bigger picture here. So we're looking at 1, 2, 3, 4, 5. This is the daily. Then the A, the B wave here, which would be in 3 waves here. So this is what we're looking at now. So we're looking at an A and a B and a C, a 3-wave swing here, which would line up with the S&P 500 and so forth. The wave B can move back 61.8% of the length of wave A there, but that's not always the case as well. That's just sort of textbook stuff, but what we're looking at here basically is that because we've got 5 waves up here, that means that we'll get another 5 over here, and that's why we're long on the banks, because we know that the banks have been leading the bull market up. So if anything's going to lead, it's going to be those, and maybe some of the retailers, because we know that the rally that the move up that we're having in the commodities is just that, a corrective rally. But anyway, getting back to this here, so look, essentially a larger A, B and C. Now look, it can get more complicated than that past this wave C, but let's just work with the simple, A, B and C correction first, and let's see what the internal wave structure is at that point there. But in another sort of a nutshell, the market's working across this level 5 here, the 5,000, a little bit like the Australian dollar working through the 105 as well, the same thing as well. In both cases, we want corrections across here, and the correction is the foundation for the next trend up. So we need to see this as a larger corrective pattern and then find support on 5,000, and any move to the upside then we'll catch that there. But just drilling down into that a little bit further, this is what we've been tracking for this market here. We've got a nice little wave 1 up from here. This is the 1 hour chart, back for 2. The wave 3 up through here, the longest and the strongest and the quickest and all that sort of thing. The 1, 2, 3, 4, 5 wave structure in that. And then we've got the wave 5 up here as well, which can be up for 1 and back for 2 here. Then 5 waves up to this point for wave 3, the 4 back here, and the 5th wave up through here. Kind of expecting another little push up here, if you remember, but that's not going to be the case. So we can pretty much peg that in there. And now we're looking for the first move down, which would be the A wave. Now the A wave's a tricky little sucker, because in Elliott an A wave can be in 3 waves, so a 5, 3, 5 structure. So that could be the low just there. We've got 1, 2, 3, 4, 5 in here, an A, B, C back here, and another 5 in through here. But let's just see if we do get another little wave down here. Now the important thing here, if we get a little wave down through here, that will give us 5 waves down. The 1, 2, 3, 4 and 5 down to here. Now if we get 5 in the opposite direction of the trend we've just been coming from, that means that after this 5 waves here, we'll get another 3 wave counter trend retesting the 5,000, and then we'll see another move down. And that would be the B wave at that stage. So we could pretty much sort of put that there. That's the sort of thing that we're looking at here, the A, the B coming back and retesting this, and then the C wave in 5. This C wave here should be about the same length as this one through here, so that will bring us into this point here. We can be looking for, the textbook thing is the 61.8. Sometimes it hits it, quite nicely, but anywhere between the 50 and 60. I kind of like to see support. This block of price action here would have come with a fair bit of volume, so that's support 1. Support 2, if support fails at this block here, then it simply drops down to the next block, which would be this one here. So we would see the lower end of the 61.8 through here. So that's what can happen at that point there. So we could say that if the 49.50, the midpoint, which is the most important number between the 4,900 and the 5,000, the 49.50, if that becomes the retested resistance, then we've got a deeper correction unfolding there. So as long as it pretty much sort of stays in that area and builds up from there, everything should be pretty sweet, and we should see the next leg up from that point there. Alrighty, let's have a look at commodities, because as you probably already know, they've fallen out of bed, and that's going to obviously push the BHPs back down to the lower side, as we've been talking about all week, just waiting for the rally to top out. I wasn't expecting them to fall off that sharp, but anyway, let's have a look. Okay, I'm just going to start with copper, and we were looking for 5 waves up. We knew that we were looking for a corrective rally to the upside, but it wasn't the case. We were expecting a move up, and we've got that. We thought we would have 5 waves up here, then 3, then 5. It still may be the case in a bit of an odd way, but I have to relabel this situation like this here. I have to label this now as an A and a B and 5 waves up for the C here, and then this down for 1, back for 2 here, and then down for 3 here, and that would be down for 3 to here, back for 4 to here, and then down for 5 to this point through here. So we're actually counting a 5-wave structure to the downside. Now, if that's not the case, then what we have here is we have this as an A wave here, then a B wave in here with only 3 waves, such as an A and a B and a C here, and then we'll have 5 waves up, making a larger ABC. So essentially an A wave, a B wave, and a C wave, and then the market rolls over. So we just got to work through this. It's not that we're going to sort of miss much as such, but what we need to do now is we need to allow this to finish down here. So this little wave 1, wave 2, 3, 4, and 5 for the third here, the fourth back to here. If this 5th wave doesn't come into play here, then we know we've got a B wave. So if we don't get that 5th wave here, and that from that 3rd wave it just continues up from that point there, then we know we've got a C wave to the upside. It's just the corrections in Elliott are the weakest point, the weakest link, and we just need to be a bit more cautious and work through them. So look, we can have an A and a B and a C wave up through there. Okay, that's what we could have, and then the market rolls over. Otherwise, we'll be looking at this as the whole correction here, and then this will be an impulse wave working lower down through here and continuing to work down, because when you look at the bigger picture as well with the levels is that we're looking at major trading level 3 to the downside, so the $3, if you will, as such, and this here is really just the bounce off group 1, isn't it? The 30, the 10, 20, and the 30. So this is the bounce off group 1, and that's what it normally does, come back and hit the 40 and then move to the downside. But because of this strong leg up through here, I started to look at this as an impulse wave. I knew that we could count this up as an impulse wave through to here, so I knew that we'd get more, but when we had this strong structure here, we had to start counting it as an impulse wave. But because we didn't make a new high and we've dropped down lower through here, then it really just pegs that as a corrective wave, and now we need to see if this is going to extend as a impulse wave or just as a corrective wave and part of a larger corrective pattern such as a wave B. I do believe that it's down further to the downside, and the reason for that is the gold and the silver, the precious metals. So just looking at silver here in the bigger picture, we've retested 28 here and the market's fallen out of bed, and this is the medium level down here where we expect it to move down to. I don't know if you sort of remember this that much, because we don't talk about silver a great deal, but we were looking at wave 4 up here. We're looking down for wave 1, wave 2, wave 3, and we're looking for wave 4 to come back, pretty much the same as gold as well, but gold just went a bit like higher, and it was a bit more sort of confusing at that point. But we can see that obviously this has taken its toll here and taken the bottom out here, so we need to count 5 waves down now. So that would be down for 1, back for 2, down for 3. There'll be a wave 4 across to 26, and then down to 25, down to 25.50, because having the third wave in here, having the extension in the third wave would make the wave 5 here pretty much equal to the wave 1. So the wave 1 and the wave 5 here will be about the same. So we're looking at 25.50 down through to here at the 26 here. Then you need to give it time here. It's going to bounce around here for a little while, but look at it intraday. It needs to have that as a tested resistance there. Once that tested resistance is in play, then you can move down with that. And the gold is the same sort of pattern as well through here. We were looking at, where were we up to here? So we had this pegged as a wave 4 here, and we're looking for wave 5 to the downside. This I've counted this in a bit more of a bearish picture here, but we will look at it in different ways as well. If we looked at it in terms of silver, then we'll look at this as down for 1 here, back for 2 here, down for 3 here, down for 4, up for 4 here, and then down for 5 here, which would be the 1, the 2, the 3, the 4, and the 5 for the third wave here, the fourth wave, and the fifth wave down through to here. But I've just, for the time being, I just want to I need to have a look at some of the other gold markets, but this can also be counted as down for 1, back for 2 here, then down for 1, back for 2 here, then the 3, 4, 5 here, just for the wave 3, then the 4, and then the 5 to make this 5 here. So I need to do a little bit of work on that. It's a sad day at the morning at this stage, so I'll do a bit more work on that over the weekend, and just want to have a look at some of the other indexes and some of the other gold markets in the AMIX and all the rest of it. So yeah, we'll get back to that, but that's definitely a third wave there. So we'll definitely see this sort of move down here further from the subgroup 2 area here, 65, 72 and the 80. Expect a retest of that particular price point there, and then eventually fading from that. So if you're looking for a short, wait for the retest there. The oil market as well, it's fallen out of bed as well. We'd sort of known this anyway, because as you know, last week we're looking for the high to come in around this area here. We've got that, and then we got the impulse wave down through here as wave 1. We were looking for a wave 2 back, and to be honest, I was looking for a larger sort of kickback through here, so we could catch that third wave down. In fact, we went to short WPL, but on the same day they brought out the announcement that they weren't going through with price point or whatever they call it. So that obviously gave more funding back to it, and it gapped the other way. So yeah, a little bit unfortunate about that, but we didn't get filled on that, of course. But looking for that short trade there. So look, what we're looking at here now is we've got down for 1 and back for 2, down for 3, back for 4. Should pull back to the wave 4 of 1 lesser degree to this point here, and then move down through to here. And essentially this wave 2 here going down to wave 3 here. This wave 3 here should be longer than than this wave 1 here. So from that point to that point, then this wave 3 has got to be longer than that. So this can still be unfolding to the downside through here. But any shorting that needs to be done here, you just need to be careful, because there should be a bounce off the 90. So when it comes back up, back up into the 92 area here, then you can short it from there. Or if it's going to drop down sharper, then allow it to come down and get stuck under the 90 there. Just don't get caught in the middle, that's all, because you'll just be sort of dumped around a bit. So you need a retested resistance here, or back up here on the wave 4 through here. Let's have a look at the US dollar and the euro and Australian dollar. Okay, the GFT are obviously doing some maintenance on their platform, so I can't access the platform to get to the FX chart that we use. However, it's all pretty simple at this moment. The US dollar is still pulling back down to the 82. So while that's pulling back down to the 82 mark, we expect to bounce off the 82. But while that's pulling back down there, the euro is still working across the 131 and is being we'll be having the group 1 above 131 and group 2 below 131 as the trading range, and that should start to lock in there now as a bit stronger there. So there's no trade on the euro just at the moment. The Australian dollar is the more interesting one. As you know, we've been tracking 5 waves up, which was above the 105, and that wave 1 is in place now. Now we're pulling back for wave 2. Now in wave 2, we're looking for a 3-wave swing. So that's an A to the downside, which has begun now, and then there'll be a wave B back up a little way, and then wave C to the downside to make wave 2. So we're still a couple of sessions off that wave 2 pullback being in place. So we've got time there. I don't suggest any trades across the 105. If the 105.30 becomes a tested support, then you can trade long off that. But otherwise, it should work lower, and it will be reasonably choppy as well. So you just need to be really careful about what you do there. But we want to see a nice clean A, B, and C zigzag correction to the downside. Maybe down to the sort of 104.50 area, maybe not that, maybe sort of 104.65.72 sort of in there, but we'll track the pattern instead. That will give us a more accurate price point to work from. So look, there's no trade there yet on the AUD USD, but once it pulls back into that nice ABC correction, then we can start to move in long from that point there. So I would imagine that could be around the Tuesday, Wednesday, depending on how quick the pattern unfolds. So alrighty, well, good morning and good luck, and enjoy the day ahead.